Everybody, I'm making a really quick release video that it's concerning something I think you need to be very, very, very concerned about, and I think you need to pay very close attention to what is going on in the overall market. And I think you need to take some precautions in your own personal lives just in case it does actually materialize. Now, last night on our investors conference call, which we have for the Investing the Right Way show, we showed you something that I actually released a separate video on about a week ago. This is the graph of the S&P 500. Now, this line right here that I'm highlighting, that's a line that I've drawn. And this line up here is a line I've drawn. Those are trend lines that actually follow the S&P 500 and give us overall market direction and kind of a market tone about what's going on. And you'll notice this bottom trend line, it corresponds with this magenta pink type wavy line. That's our 50-day moving average. Now, in the market, we look at the 10-day moving average, the 20-day moving average, the 50 and the 100 and the 200-day moving average. And each one of them are very significant. This little red wavy line right here, that is our 10-day moving average. And of course, this magenta colored wavy line is our 50-day moving average. And you can see what happens with the overall S&P, that as we come down, if we ever touch the 50-day moving average, and you can see it did right here, we immediately bounce back off of it, and you have a nice little rally there for a few days, which means you can almost not help but make money on call positions and things of that nature. And that's awesome. Well, I noticed something here about a week ago that there was some consolidation, we call it, going on in the S&P. And I'm going to draw you another trend line. Let me grab my trend line tool, and I'm just going to come across these 2 points right through there. And you can see that we form like a tabletop. And what that's telling us is the S&P, we tried to go above that point and we couldn't. Every time we attempt to move upward to it and in many cases bump up against it, we turn around and came right back down. It acts like a ceiling that we can't break through. And in addition, we notice that our hump, our valleys get shorter. Our candles get shorter. And what happens is when you see this, it always is going to break down. It always is going to break down. It happens for single stocks, and it happens for the market in general. Well, I released a video on this day. Actually, it was this day in the morning, early in the morning, and that day we broke down. The next day we broke down significantly, and on this particular day, you can see we broke through our 50-day moving average. That's very significant. Now, the 10-day is significant, the 20 is significant, the 50, the 100, the 200, they're all significant, but the larger that number is, the more significant it becomes. Well, once you break through the 50-day moving average, you now have to try to figure out how to get above it. That 50-day that does act like support, meaning we bounce off of it and go back up, if you ever break through it, now you got to break through it to get back up. It acts like resistance. We bump up against it. Well, what happened is on the third and final day, we actually went down, hit the 100-day moving average, couldn't get through it, thank God. But for the remaining 1, 2, 3, 4, 5 days, we could not get back above the 50. And you see, because we've remained so low, it's actually pulling that 50-day moving average down. We were trending upward, but now it's pulling it down. And in fact, the 10-day moving average has crossed below the 50-day moving average. That means I have to now get through the 10-day moving average before I can get to the 50, and then I have to get through the 50 before I can have any kind of rally. Now, the only way that can happen is if we have good news. Tanner and I have talked. We don't see where the good news will come from. We don't think there's potential good news to pull it through. We think there's only bad news that's in store for us this week. This 100-day moving average line, you'll see we've bumped on it. And on this particular day and on this particular day, we bumped up to it multiple times. So this day we actually hit it once and bounced up. On this day, we hit it about 4 or 5 times and bounced up. On this particular day, we hit it twice and bounced up. That's not a good sign, because this whole time, it's pulling the 50-day moving average down. So there's more consolidation that's going on, and here's the only thing that can happen. There's only 2 things that can happen. One of them's very good, and one of them's very bad. And that's the purpose of releasing this video, so you can be prepared in case it's very bad. Okay, so let's talk about the very good scenario. What's going to happen is eventually we're either going to get enough momentum to go through that 50 or bring the 50 down and then go through it. And if we go through it, you're going to see a nice little rally. And like I said, you can invest in any kind of call play position and pretty much make money as long as you make a reasonably, safe, well chosen position. You can't just obviously invest in anything, but picking up one will be very easy for you to do. Well, what happens if the opposite happens? The 100-day is very significant, way more significant than the 50, just like the 200 would be way more significant than the 100. Well, if we consolidate to the point where we break through it down on bad news, and personally, I think we got more bad news coming. I don't think this whole emerging market thing is over. I'm pretty sure that you just really haven't heard the real story behind the emerging markets and what that means. If we break below that 100 moving day average, not just like go dip below it and come back up, but I'm talking about go through it, stay there for 30 minutes or more, and more crucially, close below our 100-day moving average, you're going to see a sell-off in the stock market like you have not seen in quite some time. It'll set panic in with technical investors, and there's more technical investors than there are people that just follow their gut. Okay, technical investors look at this 100-day moving average, and if we break below it and stay below it for any significant amount of time, they're going to begin to panic, and they're going to see the sell-off coming, and so they're going to want to get ahead of it, and they're going to actually help promote the sell-off. If we sell off, the next stop is our 200-day moving average, but the problem is once you break below the 100, if everybody gets behind it on a sell-off, which is a big, huge possibility, a very likely possibility if we get below the 100, there's going to carry so much momentum that it'll go right through the 200, and hello, bear market, here we are. Now, that could spell disaster in a couple of ways. Am I foretelling a potential stock market crash? No, I don't think I am. But here's something that could happen. If we see a huge sell-off, which going below the 100, I believe will trigger, then you will see several back-to-back days in a row of selling off. That's not going to make the financial news. Just the financial news. It will spill over into the regular news that you see on every television station, and you're going to hear about it on the drive to work in the morning. It's going to spill into every single news media, okay? And if that happens, you're going to potentially see a run on the banks, or people try to run. They're going to run on the banks, try to take some money out because they're going to be very, very concerned. If a potential run on the banks happens, the banks have no choice but to freeze assets until those emotions subside. So here's what I'm telling you to do. You need to do two crucial things right now on today, if you're listening to this, and certainly by my Monday morning. Two things you need to do. Number one, you yourself need to go get some money out in cash. Why? Because if this does break below the 100, and then you're now looking at a potential run on the market, which means a run on the bank because it'll spill over into the news, and you won't be able to get your assets out of the bank. Now, don't withdraw them all. Just withdraw what you need to say, a couple, 3 weeks. If you can, if you're financially able to take out some cash that will sustain you for 2 or 3 weeks, I think that would be a wise situation. If this all pans out, if we go back up above the 50, hey, no problem. You just go put it back in. Simple, right? The second thing that you need to do, just to be on the cautious side, is if you're enrolled in a 401k plan, right now, you need to log online if you have that capability, and you need to move from equities over into money markets or cash. Again, you can move those back into equities if we start to have a rally, and hey, you make money on the deal with your 401k plan. But remember what happened to those the last time we had a bear market and you were in a 401k. You lost, half your investments, because you couldn't get and move them over there fast enough. So just at least temporarily, just for the time being, if you have for 401k, move it over into money market, which is just like basically the bank only with interest, or move it into cash, which means it's not investing it into anything. So it's neither making you money nor losing you money. It's just sitting there waiting for you to tell it what to do. Wait through this next week, see what transpires. I feel really positive that whatever is happening right here is going to shake out by Friday. We're going to know what's going to happen by Friday because this consolidation is happening too quickly. That 50-day is moving down. We're either going to bounce off of it, go through the 100, or we're going to bounce off the 100 and go through the 50. One of the two are going to happen. It's going to happen this week. And the only thing that I'm doing is telling you just to be a little bit cautious. Take a few steps to help protect yourself for a just-in-case scenario. Hope I don't sound like an alarmist, and I hope this wisdom actually helps you out. Thanks.